Thursday, August 15th, 2019, Maneco 64, home of alternative economics and contrarian views. Today is the 48th anniversary of when President Richard Nixon closed the gold window, August 15th, 1971. President Nixon declared that he was going to temporarily suspend the convertibility of the Federal Reserve note into gold. He said the convertibility of the United States dollar, right, at $35 an ounce. And it's been like that ever since. Temporary, right? That's what politicians like to use, that term. I think the income tax in the UK was supposed to be a temporary measure to pay for the Napoleonic Wars, and we still have it now, the income tax. So with that anniversary today, I want to talk about a central banker that I actually admire, and you might find that funny, but I do. His name was John Exter, and I want to talk about what I think is happening now in the monetary financial system, and refer to John Exter's pyramid. Before that, of course, I'll just quickly look at the markets and see what they're doing this morning. It's about 10 to 8 a.m. London time. So yesterday was another very interesting day in the markets. I think the markets are panicking. There's a rush to government bonds, government paper, out of the stock market and other riskier assets. And that's why I want to talk about John Exter and his pyramid in a minute. So yesterday the Dow finished down 800 points after a day where it rallied over 300 points on the back of comments about the trade negotiations and the tariffs. So it was a dead cat bounce. Meow, right? Dead cat bounce. That's just a market terminology. I've got nothing against cats. Billy doesn't have anything against cats either. Billy did not wake up today. I just left him. He's getting old. He'll be back though. So yeah, the Dow finished down over 3%. S&P finished down just under 3%. NASDAQ finished down 3%. So not a great day for stocks. Yields went further down. The 10-year yield yesterday, let's see, I took a screenshot here, was down 10 basis points, and it was around 158 at the end of the day. Some people noted that the 10-year yield actually went below the 2-year note yield during the day, which is another sign of inversion and another bad sign. Even the 3-month yield yesterday dropped 6 basis points, and that means people expect the Fed to cut. The expectation increases that the people expect the Fed to cut on September 18th, I think, or 17th. I'm not too sure about the date. So yeah, we closed at 195, the 3-month yield, and at 158 there. So almost 40 basis points inverted, the yield curve. So, and of course, gold and silver rallied back up. Gold, I think, rallied up to 1525. Silver outperformed. So precious metals rebounded after the drubbing they took the day before yesterday. So that's what happened yesterday. Right now, 10 to 8, as I said earlier, London time, we've got spot gold at 1512.60. It's down just over $3. As I've said, market is going to stay volatile. I think gold and silver are still the places to be. Not as a trade, as I've said before. I've been accumulating precious metals since 2002, physical precious metals. And it's what I've been doing. And you'll see why when I talk about John Exter. So right now, silver 17.19 is down about a cent. Range has been 17.14 to 17.40. Gold's range, by the way, has been 15.08 to 15.24. The Dow is up 159. So is everything hunky-dory? Are all the problems solved? I don't think so. This is just volatility. So yeah, it's up just under 0.2% at 25,622. S&P 500 up 20 points, and the NASDAQ 100 futures up 0.5% or 40 points at 75.30. Currencies, pound is at 120.67, virtually unchanged. Euro is at 111.50, up 0.1% against the dollar, and the dollar is up 0.33% against the yen at 106.24. Dollar yuan, dollar is down 1/4 against the yuan at 703.58. Crude oil, WTI 55.25, unchanged, and Brent 59.11. You can see that when the stock market goes down, crude oil is going down as well. Crude oil was a bit higher yesterday. Bond markets this morning, the 10-year yield is unchanged at 157. So you'd expect it to be up with the stock market up, but it's not. 2-year note is 157.5. The 10 year is actually 157.2. So the curve is slightly inverted, not materially. I've been talking about the inverted yield curve since December. I did a video in December 2018 saying that the inverted yield curve was pointing to a recession. And a lot of other people pointed the same thing. It's just that the powers that be, the central bankers, politicians, PhD economists, they always try to make it that it isn't, even though historically that's what it means. So yesterday there's a lot of headlines about recession, the yield curve, but that's old news should be old news to you who's been watching this channel for a while, and it's old news to me, and I'm not surprised. With that, let's look at John Exter. Well, John Exter, before I go into his inverted pyramid, let's read a little bit about him on Wikipedia. There's an entry for John Exter. So John Exter, September 17th, 1910, February 28th, 2006, was an American economist, member of the Board of Governors of the United States Federal Reserve System, and founder of the Central Bank of Sri Lanka. He's also known for creating Exter's pyramid. So let's have a look a little bit at his career. I think it's interesting to look at what, people's biography. I think it was Disraeli who said that it's more important to look at people's biography than at history books. Anyway, Exter was born in 1910 and graduated from the College of Worcester. That's in Ohio. I know that because one of my old clients in the U.S. went to that college as well. College of Worcester. I think it's in Miami, Ohio. He then went to the Fletcher School of Law and Diplomacy, and in 1939 to Harvard University for graduate work in economics because of his interest in understanding the causes of the Great Depression. After his stint at the Massachusetts Institute of Technology during World War II, Exter joined the Board of Governors of the Federal Reserve System as an economist. In 1948, he served as advisor to the Secretary of Finance of the Philippines and then to the Minister of Finance of Ceylon, now Sri Lanka, on the establishment of central banks. Between 1950 and 1953, Exter was the founder governor of the Central Bank of Ceylon. In 1953, he became the division chief for the Middle East and the International Bank for Reconstruction and Development. In 1954, the Federal Reserve Bank of New York appointed him vice president in charge of international banking and precious metals operations. Exter left the New York Fed in 1959 to join First National Citibank, then the world's second largest bank, as a vice president. The next year, he was promoted to senior vice president. As an international monetary advisor for the bank's international banking group, He had special responsibilities for relations with foreign central banks and governments. In 1972, he took early retirement to become a private consultant. Exter was a member of the Council on Foreign Relations. I know, but wait for me. The Committee for Monetary Research and Education, the Mont Pelerin Society, that's in Switzerland, and the Pilgrims of the United States. He and his wife, Marion, had 4 children. So what does it say about Exter's pyramid? It says Exter is known for creating Exter's pyramid, also known as Exter's golden pyramid and Exter's inverted pyramid, for visualizing the organization of asset classes in terms of risk and size. In Exter's scheme, gold forms the small base of the most reliable value, and asset classes on progressively higher levels are more risky. The larger size of asset classes at higher levels is representative of the higher total worldwide notional value of those assets. While Exter's original pyramid placed third world debt at the top, today's derivatives hold the dubious honor. So how long have I been following John Exter? Well, way before when he died in 2006. I think I started following him. I read about him on the internet, probably 2003 or 4. And I was still in the city, working in the city at MF Global at the time, which was a firm that went bust about a year after I left. John Corzined it, of course. And I remember I had a few colleagues who I talked about with about John Exter, the gold. I got into gold in 2002, and yeah. So this has been a long time. I've always, how can I say, believed that what John Exter said about the pyramid, and I'll come to that in a minute, would come true. And I think we might be, how can I say, experiencing Exter's inverted pyramid. And what did John Exter say about the pyramid? He said that there would be a deflationary collapse of this I owe you nothing system. That's what he called the system that we have after 1971. I owe you nothing, because all the money is backed by government bonds, which is basically I owe you nothing. There's no it's not redeemable into commodity money, gold or silver. And I think, and his theory is that when you have the inflation of the system, and by inflation we mean the creation of credit and fiat currency out of thin air, a huge inflation, CPI, consumer prices haven't risen as much, but we've had the prices of all these assets rise. And what he says is that eventually the whole system will implode, and all the liquidity from the pyramid will flow into the bottom where gold is. And I guess silver as well is there. And another interesting thing about John Exter, I've read quite a few articles about John Exter, and one as it pertains to August 15th, 1971. At the time, Secretary of the Treasury was John Connolly, the guy who got part of the magic bullet in 1963 from JFK, magic bullet. But the Undersecretary of the Treasury was Paul Volcker, who became New York Fed governor and then became chairman of the Federal Reserve in 1979. And they were, I think it was the Sunday, August 15th, Nixon came on television. I think he interrupted Bonanza to make the announcement. But he was with the Treasury officials at Camp David discussing this. And I read an article where Paul Volcker says that he asked John Exter for advice. John Exter wasn't involved, but he was a friend of John Exter. You know, what to do with all the gold flowing out. As you can see, he was in charge of precious metals operation for the Federal Reserve Bank of New York. So he knew a thing or two. And John Exter advised him, well, there's two things we can do, the United States Treasury and the Federal Reserve, or to stop the flow of gold. The first thing is to raise interest rates, but I don't think that was politically palatable. Richard Nixon didn't want higher interest rates. What politician does, right? And the other one, he told Paul Volcker, is to close the gold window. And that was his advice. Do I blame him for that? No, he was just giving his advice. Paul Volcker asked him the question. He answered it honestly. And they actually picked closing the gold window. So that's why John Exter is really important as well. Yeah, he died 2006. He was like an old man. He was, yeah, almost 100 years old. So the I Owe You Nothing article is really great. I'm going to put a link below in the description to a few more articles by John Exter that I recommend you read. Is from AIER, American Institute of Economic Research. They've got a lot of John Exter's writings, and yeah, that's what the inverted pyramid is. So as you can see now, you've got derivatives, unfunded government liabilities. I would say you've got leverage loans, everything that's leveraged and has ballooned so much. You've got non-monetary commodities, private business, real estate, corporate and municipal bonds, securitized debt, listed stocks, government bonds, treasury bills, paper money, and then gold. And that's what I think we're seeing. And that's why I think bond yields are getting negative, because people are rushing to the bottom of the pyramid. Of course, gold will be where the value is. As you can see there, it's the base of the pyramid, and you need to, of the inverted pyramid. And you need to read John Exter's Currencies Today Are I Owe You Nothings. It was written back in 1972. Very interesting, and you understand why gold is so important. Another thing I wanted to show you is the Dow Gold Ratio here. As you can see, we're quickly approaching that neckline. And this is part of Exter's pyramid, I think. And even if we aren't in the process of the deflationary collapse that John Exter talked about, eventually we will get there. But I have a feeling with what the bond market is doing, that's what's going on. As for silver, he says that silver is a good store of value and its money as well, like gold. But because of the fact that it's more abundant, it's not valued as much as gold. So I guess it would be at the bottom of the pyramid there, but not as low as gold, supporting the whole system. John Exter, a central banker, actually, that I read a lot about. I read his stuff, and this is one of the reasons why I've held on to my gold all that time. Yeah, and there's another story about him in the 60s. Up until 1975, you couldn't buy monetary gold in the U.S., but there's a loophole with collector's coins, and you could buy gold sovereigns, which are basically bullion coins. And that's what John Exter used to buy in the 60s. He knew that the price of gold was gonna rise versus paper money, because it's not as abundant, it's not as easily created as the I Owe You Nothings, right? It's out of nothing. So there you go, John Exter. I've spoken about him before in the past, but I think it's a really good time to talk about him again, especially seeing that it's August 15th today, 48th anniversary of the closing of the gold window, and seeing that we're watching the bond market bubble, and I think it's part of this pyramid. And even if it's not, and if it's going to happen later, it's still going to happen one day. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.